So this is the next video. This is the basic interface for futures trader. This is what they use. Now we'll be dealing with. I'll be showing you what each button means. From here, isolated. What isolated means is we have two options. Isolated means that whenever you are trading, you want to tell Binance that it should only use funds from this your available balance here on futures, here on your futures account. Should you get? But when you use cross and click on confirm, then when you are trading, let's say you are on loss. Let's say I'm trading with $5 now. This $4.98 that I funded. Let's say I enter a trade with it, and then maybe I'm now on loss. It has I've incurred $4.98 loss. So Binance will go to my spot wallet here where I have 92 USD. So if it is USDT I have, it will now begin to take from that money to back up my trade, so that it will not cut my trade, or so that it will not terminate my ongoing trade until the trade goes back to my until the trade goes back to my direction. But the risk of that is that if the trade never goes back to your direction, it can wipe the whole money in your account. Let's say it can wipe the whole money in your account. Let's say for example now I have 5 years on sports wallet, then I funded 5 years on futures wallet as well. And I now start trading, and then takes the trade has already taken the 5 years I used to enter the trade on futures. Then it goes back to my sports wallet, simply because I applied a cross margin. You get? Then it now goes back to my spot wallet here and start trading, and the trade is still going backward from my direction. And when it takes the remaining $5 here on spot again, it can take the remaining $5 here on spot again, and then to terminate. Then that means I lost the whole money on my futures wallet and my spot wallet. But if I'm using only isolated merging and I confirm, immediately it gets to that, it exhausts the 4.98 USD I have here on my trade. It will terminate the trade. So it's not going to my spot account to pick my money again. The money there is safe. She gets. But another disadvantage here is that, well, it can terminate the trade, then the trade later on live market later um goes back up to the direction you once predicted. Shey get, then you will have been in loss. So when you become more advanced traders, you will know these things are called risk management. You will most likely know um how to use them, when to use them, and which scenarios to use them. So this is one of the risk management. You get. Now this year is leverage. It's called leverage. So you can increase it. This is BTC. So the highest leverage here on Binance for BTC is 125x, meaning that let's say you want to trade with $100. If you increase the leverage to 125x, it means you are telling Binance to borrow you $100 times 125 for you to enter that trade. You get. So when you enter the trade, it's still the $100 that you'll be seeing. But when the trade is going your way, you will be making um much more profit. You get. And when the trade does not go your way, it will exhaust your money quickly. It will exhaust your money faster. You get. Unlike when you are using a lesser leverage. So the lower the leverage, the lower your risk. The higher the leverage, the higher your risk. Hope you get. So that is for that about leverage. So once you shift this to go, then you can select which leverage, then confirm. So that is that about leverage. Now we have these buttons: buy and sell. Buy means long. When you see a signal and they say long, it means buy. It means you are using the buy button. But when you say seeing a signal and they say short, it means you are putting it here on sell. Hope you understand. So now here limit market. We have different kinds of stuffs here. But the most important thing I'll be showing you is this limit and this market. Now what the market is for is that you want to enter the trade as at this actual price, the live price you are seeing here. It means you want to enter the trade during that time. But if it is limit, it means you are waiting for the price of BTC here. This pair is BTC USDT. It means you are waiting for the price of BTC USDT to maybe move away from, maybe you are waiting for the price of BTC to enter. Now, for example, the price is currently 24K, $24,000, 462, right? So it's ranging between 460, 450. Now let's say you want to wait for BTC to get to $26,000 before you now short it or sell it. Then it's most likely you might not be in the market as at when BTC will get to $26,000. So this is what they use limit for. Then you now click limit. You will now set the price here. Here where I put my cursor, you will set the price to 26. Then you will drag this cursor to the amount. If you are using all the, this means how much of your capital are you using? Is it 50%? Is it 50% of the 4.98 USDT I have here that I want to use to enter the trade? Or is it 75%? Or is it the whole 100% that I want to use to enter the trade? This is what this means. Sure you get. Then you will now click on sell here. It is a, then when you click on sell here, now you will click on confirm. But mind you, this trade will not go live yet. It is until BTC gets to the price of 26 USDT that this trade will now trigger. So the advantage there is that you might not be online or you might not be on with your Binance app by the time BTC reach 26 USDT, and maybe you've heard a signal that when BTC reach 26 USDT it will drop from there and you don't want to miss it. So that is the advantage. So if you don't use limit, by the time BTC reach 26 USDT and you are not there and then it starts dropping, you will miss out the trade. But when you are not there and you already set your limit trade, when BTC reach 26 USDT, this thing will automatically enter the trade for you and then to start trading. So now let me cancel it because I just use this as an illustration. Then market is for, you know, you want to enter the current price. You get, then you can see there is no price here. Unlike when it gave me um 24,301 here for me to change to 26K, 26,000. You get. But when you are using limit, there is no price option. The live price, the current market price, CMP is called current market price. That is what it will enter for you. Then you can drag here, like I told you, how many percentage of your capital, of your available balance on futures that you want to use, how much you drag it. Then these are your stop loss. You set your stop loss. Maybe you want your stop loss to be that take profit stop loss. Take profit. Maybe what take profit means is that when you are in the trade, when if BTC gets to so price, take profit, cancel the trade and take the profit. You get. Now let's say I enter BTC at 24 thousand 266. Then I want to take profit at 25,000, at the price of 25,000. So after setting all my trade, like I told you earlier, up here, all these um preferences up here. After I've selected the pair, the trading pair here, so you get. So after I've clicked on the margin, either cross or isolated, after I've used my leverage, after I've set my leverage, so you get. After I've clicked maybe buy or sell, which I told you short, sell is short and buy is long. After I funded my futures account here, she get, like I already told that. Then after I selected market, then meaning that I wanted to enter the current price, she get. Then maybe I now want to take my profit. I want to get out of the trade when BTC gets to $26,000. So I will write 26,000 here. Then I can now see stop loss means if the trade does not go your way and the price is going the opposite. When it reach so level, take me out of the trade. I don't want to lose more than that. You get. Then let's say I can say if BTC now comes below, it's a situation of if condition. You get. If and all, then if BTC now comes below to 23,700, take me out of the trade at loss. She gets. Then you will set 23 200. So when you enter this trade, I'm not going to enter this trade because this is a tutorial. I don't want to lose money. So when you enter this trade, you will be logged in at the current market price, which is 24,178. So from there, whichever direction BTC goes, if it goes to 26,000 and you are not on your Binance app, it will take profit for you and cancel the and stop the trade, and it will put your profit on your balance. But if BTC begins to dip, 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 okay, this is a sell. Most likely you will be using buy rather. Sorry about that, because when you are using buy, that means you are expecting the price of BTC to go up. So if BTC begins to go up from 24,207 or 24,200 and it reaches 26K, then it will take profit for you and add the profit to your balance and exit the trade. Then, but if BTC does not go up and it keeps coming down, and then it reaches 23,200 in price, 23,200, it will you will have been in some loss there then. But the advantage is that you won't lose more than that when it reaches 23,200. Then it will cut you out of the trade and remove the loss you already have. So it's better than not setting it to stop loss and the thing chops your own money. She get. Then you click on this is the button you click to confirm the trade. She get this buy long stuff. So that is that about the interface. Now, when you're on a live trade, these positions, when there is an ongoing trade, this is where you will see it. You will be seeing your profits and everything. That is when you enter a live trade. Now, here, this thing here, this candle signal, this is where you check the chart of the trade you are currently into. So it's just to check chart. You can zoom in by dragging, you can zoom out, you can, do anything. So um it's as simple as that. But mind you, you don't just enter into trades anyhow without proper analysis. Don't try it. You will get burnt. So that is that for that.